a lot of us are doing a lot of things, and we always feel like, oh, I don't want to report it to the IRS. But I feel like the moment you start to report it on your taxes, it legitimizes you. And then not only that, when things like the PPP or the SBA loans, they come around, you can qualify for those things because someone can look at your taxes and say, oh, this person is actually doing something on this side to generate additional income. You're helping to pretty much build the economy. So, yeah.
Thank you, everyone, for joining us on another edition of Iwing Marketplace Chit Chat, where we give the opportunities for entrepreneurs to talk about what they do and to showcase their business. I'm with Lilly Mbinglo. She's been here before, and she always has very good tax tips and business advice to share with our community. Thanks for joining us, Lilly.
Thank you so much for having me, Ivan.
I'm always happy when you come on live because I know you're knowledgeable and you're like a resource center.
Thank you.
So, I mean, you've been with us before, but I know there are people who will be watching this for the first time. Can you please introduce yourself again?
Absolutely, absolutely. So my name is Lilly Mbinglo. I'm a licensed CPA, certified public accountant. My company is called the Ark NPS, and we provide accounting, bookkeeping, tax preparation services, business, nonprofit startups, and consulting to businesses, nonprofits, and individuals.
Wow. I am always happy when you give a very good pitch like this, like very concise. And, I'm glad to see you doing what you're doing, giving this important service, to the community.
Thank you. Thank you.
So I have this question for you. You've recently expanded, from Virginia to Texas and Chicago.
Mm-hmm.
What encouraged you to do that?
So it's so interesting you even brought that up. When I got to the US, I stayed in Chicago, and then I moved to Texas and then Virginia. So I had built relationships with people in these cities already. And so as my business was expanding and I already had clients from here, from my prior years, I figured it was only best to have an office there that could serve them and also help us expand to new client base in those cities that I had my roots in. So, which wasn't planned. I didn't think of it in terms of my roots. It just happened because of those relationships that were already existing.
Wow, it's beautiful because you're already well known in these places, so it's not like you're starting from you're starting at fresh,
Exactly.
But this is tax season. We're going to be talking a lot about taxes.
Yes.
And there's this question that most business people are asking right now about the PPP. Mm-hmm. They're trying to find out if they're qualified or, if what is the rules of the PPP? Are they going to be taxed for the money? So can you explain that to us?
Oh, absolutely. So no, they are not taxed. First of all, the PPP is a payroll protection plan, which means it's supposed to help people that had employees to still be able to provide them with payroll, while the businesses were going through the pandemic. Same thing with individuals that own their own businesses. Because your business was paying you, you get this protection. That way you have something to take care of yourself while you're dealing with the pandemic. So a lot of people do qualify. It's just they haven't sat down to talk with a professional that can guide them. A lot of times it's really if you had a profitable business, and sometimes when we file our businesses, especially, and I'm focusing on small business owners, because the bigger businesses that ran payroll, that was automatic. Most of them qualify. But for the small business owners, a lot of times they don't like to report profit. And the way this was done is your profit divided by 12 times 2.5. Then that's the amount that you get. So do you qualify? Probably a lot of people might qualify if they had a profitable business, and it's just for them to go on their Schedule C. I'm not even going to go into too much technical details, but just go on your Schedule C. Look if you reported a profit. If you did, there's a chance that you qualify for PPP. And that's honest, yes.
Right. So the Ark NPS help people to apply for PPP, right?
Absolutely, absolutely. We have someone on our team that is literally tasked with that. So if you reached out to us, she would guide you through the entire process. Since this is tax time, me and my other colleagues are focused on taxes, but we have a particular person on our team. Her name is Winter Savage, and her focus is the PPP. She will provide guidance. We even have a list of things she will walk you through to make sure that you're qualified. And then if you don't have a local bank, we would use other online banks to apply for you. Yes.
Oh, that's nice. So today, our focus is to, encourage people to, see how they can save money from taxes.
Yes.
And look into strategies that, they can also benefit, because I know America is built for business owners, not for people that are working. So in order to establish that, I would like you to tell us about the differences between filing tax as a business person versus filing tax as an employee.
Okay. So most employees generally will receive a W-2. Not most. If you're an employee, if you're defined as an employee, you should get a W-2 at the end of the year. When you're filing your taxes as an employee, you don't have too many tax breaks. You cannot really deduct a lot of your personal expenses or anything like that. You generally would use your standard deduction, which is either 12,400 for a single filer, 18,450, I think, for for head of household, or 24,000 and something for married filing jointly. Okay. Now, if you had medical bills that were over 10% of your income and you give a lot in charity, you can itemize. That's all that you have as an employee. Okay. Other things that you can have benefits as is if you contributed to an FSA account and then you paid for childcare. That's tax-free money. You don't have to pay. But as an employee, that's the most. And then your retirement account, you can get retirement credit. If you put money into a retirement account, there's something known as savers credit, that I can talk with someone one-on-one for that. Okay. For an employee, it's very limited areas, right? If you have certain expenses that qualify for you to take an itemized deduction, which is higher than your standard deduction, then fine. As a business person, there is no limit, right? A business person files their taxes generally using a Schedule C, which means any expense that was incurred in order for them to run their business, they can deduct it. So an employee cannot do that, right? So their phone bill, they cannot deduct it. Their house rent, they cannot deduct it. But a business person, if they use their house as an office, they can deduct a portion of it. Their phone bill, it is. Their car, they can deduct a portion of it. So there's a lot more deductions for someone that is a business owner versus someone who is an employee. And then with business owners, depending on your business structure as well, there are different tax forms that you could file. And that varies from person to person. So, but those are usually the main differences: the Schedule C for business owners, and then for the standard deduction for employees.
I like that, you mentioned business owners have so many tax breaks, so many deductibles, which means they can save a lot of money and they can use that money to build generational wealth.
Oh,
So, right. So what kind of businesses, can people start up in order to profit from this? Because I know a lot of time in our community, we have people doing very good businesses, but they underestimate themselves.
Mm-hmm. Mm-hmm. Any business, Ivan, anything that can generate income for you and your family, right? A business is pretty much an exchange, whether it's in services, whether it's in goods, whatever it is that you're able to exchange with somebody for, monetary value. So if there's someone who has a passion to talk, start an MC business. You can deduct all your mileage that you drive to those events. If you print business cards, you can deduct it. You can do any kind of business. There's no limit to what you can do. A lot of us are doing a lot of things, and we always feel like, oh, I don't want to report it to the IRS. But I feel like the moment you start to report it on your taxes, it legitimizes you. And then not only that, when things like the PPP or the SBA loans, they come around, you can qualify for those things because someone can look at your taxes and say, oh, this person is actually doing something on this side to generate additional income. You're helping to pretty much build the economy. So yeah, any business.
Wow, that's a very, very beautiful advice you've just given, you know. I really appreciate that, Lily. And I hope people will take advantage of this, you know.
Yes.
So in on Iwing Marketplace, we have so many business owners, and I'm pretty sure they're wondering, you know, probably they're going to be filing taxes for their first time, and they'll be, you know, they'll like to know like the process of filing taxes as a business owner.
Okay. So it's not a complicated process. The most important thing is having accurate records, because many business owners take for granted the importance of keeping track of everything, right? There are costs that you're going to incur before your business even starts. From the moment you start to register your business, or you even start buying samples or trying to test things, those are all expenses that are going towards your business. So the important thing is having record of all of that. Once you have accurate records and you have kept a list of all of that and the money you spend, if any money came in, then you can also record that. If you haven't started making money, it's still okay, because every business will go through an investment phase. Now, once you have compiled all of that, depending on if you're doing it by yourself at home or you're going to a tax professional, I always say when you start having a business, avoid doing it yourself unless you really understand it. And the reason is because when you talk to a tax professional, there are certain expenses they can look at and say, oh, you know what? Why don't I see this expense? Considering the kind of business you're in, I should be able to see this expense, right? Like someone who is driving Uber, if you come to me and I don't see expenses for food, that's odd, because if you drive Uber, you're supposed to eat while you drive, right?
Right.
And so now, if you're talking to me as a professional, I would ask you that, but maybe you, as the person doing it at home, that's a whole expense. Think about spending food every day if you're driving Uber. Maybe that's $10 to $15 a day for 5 days a week. 20 days a month, and all of that you're about to leave, or how many days a month, or even more, 25 days a month that you drive, or how many, but that's money that you're about to leave on the table, right? So it's good to talk to a professional. If you have a business, talk to someone that has been doing business taxes. Don't just go to someone who's been inputting numbers, because they'll just take your numbers and they put it in. You need to go to someone who can ask you questions. Same with an Uber driver. If you come to me, when I'm looking at an Uber person's mileage, I don't go with what Uber gives, because what Uber gives is what they have the moment they turn on their meter. But think about it. Before they turned on their meter, they drove from their house to that location. Is that not business mileage?
That's
You see what
business
I'm saying?
mileage.
So it's important to go to someone who is a professional, so they can look at your expenses and immediately know certain expenses that you may be leaving on the table and provide guidance on that.
Wow, that's a good one also. Thanks for sharing that.
Mm-hmm.
So when I got my first job and I filed my tax, I realized I owed the IRS like $3,000. So I made a mistake. I filled in my form that I had three dependents. Somehow I didn't really understand. So what are some of those mistakes that people can make when they're filing taxes for the first time, and how to avoid them?
Okay. So I'm happy you brought that, because when I think of that, I'm thinking of tax planning, right?
Mm-hmm.
Where you're not just going to tax season. So there is something called a W-4, which is the information that you provide to your employer so that it can determine how much taxes to withhold. The IRS also has a tool that allows you to go on their website and you can use it to calculate how much taxes should be withheld from your paycheck. So when you're completing your W-4, it's important to indicate, what your current status is. If you're a single person, put that you're a single person, right? So that way you're getting enough taxes deducted for you. Because what will happen is, if they don't withhold enough taxes, when tax season comes, when you're about to file your taxes, that's when the IRS will be like, oh no, you were supposed to withhold even more. So it's good to make sure that when you're completing your W-4, you get someone to give guidance. They have simplified the form, but sometimes it's still confusing. So just, talk to the HR of that company to give you guidance for that. And then another thing to, coming back to the whole idea of tax planning, there are people whose tax brackets change every year. So maybe you can be an employee and you're making, 25,000. You've gone to school, you're done, and your tax bracket is about to jump up. That means your income is your tax rate will increase too. Or maybe you're in the same job and you got a promotion. So some of the things you can do ahead of time is put more pre-tax dollars into things like your retirement, in your health savings account, or your dependent care account. because those are pre-tax dollars, right? So when you put that money into those accounts, they are not taxable. So the IRS only tax you, only start to get taxed from what is left after you put money into your retirement, after you put money into your health savings account. So those are things to think about ahead of time, because when we're filing taxes, we cannot do magic. I tell everybody, but if we plan ahead of time, we can get you ahead of the game, so you don't have to, or pay a lot of taxes.
Why? Wow, 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 wow. This is amazing. Guys, I hope you're already contacting Lilly Mbinglo right now for your taxes, because you want to save money.
Yes, absolutely.
And you can only make money to build wealth if you can save money.
Yes.
And Lilly is the one that can help you do that. So guys, contact Lilly Mbinglo. Don't even make a mistake.
Thank you.
So nowadays, I see so many young people, investing in stock. Some are buying and selling at the same time. That is, they're trading.
Yes.
And I think they're making profit. So are those profit taxable?
Oh, yes. Ooh, that's a good question, Ivan. Please allow me to answer this carefully. So there are two types of profits that you pay. So when people buy and sell stocks, it's known as capital gains. When it's less than a year, that means you kept the stock for less than a year. It's called a short-term capital gain. When it's more than a year, it's called a long-term capital gain. Okay. When it's over a year, you could actually sell it and not pay taxes. You could literally have zero taxes depending on your income level, right? So if you make less than 40,000, you will not pay any tax if you kept the stock for up to a year. If you make up to 40,000 to over even 400,000, you might only end up paying about 15%. Now, for those that do short-term sale, like the people that are constantly buying and selling, what happens is that they get taxed at their ordinary tax rate, which means whatever tax bracket they're in, that tax rate will apply to the profits that they make. So they don't get to enjoy the benefits of holding stocks. So I tell people, if you can afford to hold on to a year and one day and sell, then you can literally get away without paying anything or paying less taxes. So, but those that are doing it on a short-term sale, they absolutely will be paying ordinary taxes on that.
Wow, wow. What about those that are investing in buying and selling of homes? I know there are so many people that are involved in that business right now. Do they are the profit that they make taxable as well?
Yes, it is. So now there are two things here, right? Because there are people that might be watching this that want to sell their personal home. If you want to sell your personal home and you've been in it for 2 years, you could literally not have to pay taxes if you're a single filer and over $250,000 profit. If you're married filing jointly, over $500,000 profit, you don't have to pay taxes. So it's a gain. But if you're in the house for more than 2 years, you don't have to pay. If you're in the house for, let's say, 23 months, there are a few exceptions and we can help you, guide you, like your work exception. Let's say you work somewhere out of town and all of that. We can, and it varies from person to person. Now, the people that are doing the continuous sales, which is for business, those ones do have to pay certain taxes. So that's a different thing, and it all depends now on the different aspects that go into their business and how frequently they are selling, if they are making losses and all of that, which is something that I would like to discuss on a one-on-one because everybody's situation is different.
Right, right. And also renting of properties, like people involved like in Airbnb, where they buying apartments in different places and renting. Do they have to pay taxes as well for that?
Oh yeah, I mean Airbnb is a business, right? If you think about it, it's a business. So at some point you have to report your income that you're making, and then you deduct your expenses as well. But let me tell you something that is so cool. Anyone who is watching this, I hope you take this. If you're a business owner and your entity is separate from you, either an S corp, a partnership, or something, you can rent your house to your business for up to 14 days and not have to report that income, and your business will deduct that expense. How cool is that? Which means my company can rent my house 14 days out of the year. We can say, okay, every month we're meeting in my house to do a company dinner or something. And then it has to be market rate. So let's say I can rent it for $500, right? And I can do it up to 14 times, Ivan. That income is not reported on my taxes. And then my company can deduct that if I'm a corporation. So for anybody watching this, I want them to take this tip. If you have an S corp, a corporation, a partnership, or something like that, you can absolutely do that. Have your company rent your house. If you have a massive house, let's think of it. If you were supposed to do Airbnb, maybe it will cost $1,000. Go ahead and rent it. That's $14,000 that your company can absolutely pay rents to you, and you don't have to report the income, and then they can deduct it. Yeah.
Wow, Lily, I don't know what to say, but this is real good information. You have so many strategies. I mean, guys, please contact Lilly Mbinglo. Let her help you with your taxes.
Yes,
the only way you can make it in America is if you can save money. And taxes are those places that a lot of money can be saved, you know. So Lilly, I mean, thanks so much for giving us all these good tips. You know, this last 30 seconds is always for you to, you know, pitch yourself.
Yes, yes, yes. So, I have a few tips. I don't know how 30 seconds is going to work, but just bear with me.
Just go ahead.
So this is tax time, and there are just a few things I want, people that are filing taxes to keep in mind. I've seen a lot of people in our community, they are doing trading in stocks. You're going to receive a 1099B. A lot of times the company that prepares that, your brokerage company, forgets to put the cost basis of your stocks. Make sure you check, otherwise you're going to be paying taxes on the 100% money you sold the stocks for, but you'll not be deducting what you paid for it. So please make sure you check on that. We've seen that happening already. So please make sure that you do that. I want to say that because it's a big community in our community that is doing stock trading. So watch out for that. Also, if your business is becoming profitable, please let's talk about you becoming an S corp. That way you can save more. And the reason is because if you're making over 40 grand, you're probably leaving a lot of money on the table and paying through self-employment tax. And I'm talking about profit, right? So if you're becoming very profitable, let's talk about considering you becoming an S corp, so that way you can start to run payroll on you and save on self-employment taxes. That's something I would like to talk about with anyone watching this. And then also, if you had to stay home due to COVID to take care of your kids, and you own a business, make sure you write that off, because you were allowed to be able to write up to even 10 grand for being able to staying home to take care of your kids due to COVID. So much happened last year. Make sure you take advantage of that. And then if you don't see me again, please, if you're a business owner, keep track of all your expenses. There's nothing more important. There's only so much you can do during tax time, but if you keep track, by next year we've got you covered. All right, those are my few tips.
Thank you so much. Thank you so much. Really impressive, And guys, please, there are so many businesses on Iwing Marketplace, more than 500 businesses. If you're thinking of registering those businesses, I'm pretty sure Lilly Mbinglo offer that under the Ark NPS.
Yes.
Because if your business is registered, you'll be able to save a lot of money from taxes, just like Mbinglo said. So thank you all for watching. Stay connected to Iwing Marketplace. Follow us on Instagram. Thank you, Lilly, for joining us.
Thank you for having me.
We are out.
Yes. Bye.
Bye.